Hi, everybody. Welcome and thank you for attending today's Q&A Cafe, Actual Costing in SAP Business by Design with your host, Alex Waddell. My name is Catherine, and as per usual, I'll be facilitating today. As this will be recorded, just a reminder that everyone will remain on mute, and then we'll take questions towards the end of the presentation. If you do have questions, please feel free to type them in the questions or chat box there. Before we get started here, I just want to remind you to join us next week for our Q&A Cafe. That'll be on Wednesday, August the 11th. My apologies here. I have the wrong one in front of me. Yes, Wednesday, August the 11th. That's going to be inventory management with MRP, which is material requirement planning. That's going to be in the SAP Business 1. So without further ado, I'll hand it over to Alex.
Thanks, Catherine. Welcome, everyone. So yeah, let's dive right in. So today's session, we'll be talking about one of the available options for managing your inventory in the system, which is actual costing. We will have a look at specifically that method, but I think it's important to understand that there are multiple valuation methods available inside SAP. If you are using SAP ByDesign, you're probably familiar with these, and you are likely using one or potentially more options, which is a common scenario that we'll see. So I'm just going to run through just a quick difference between them. So standard costing, your inventory valuation remains unchanged until it's manually changed in the product master data. Therefore, regardless of what you pay for an item or what you manufacture an item for as far as its input component costs, you will essentially debit inventory by that standard cost that's associated inside that product master data. Moving average uses a blend of what your input costs are. So, you know, if you buy an item one day for $100 and you buy an item the next day for $110, your average cost will be established at $105. And the moment you sell that item, you will relieve inventory of $105 and you will credit cost of goods. So that's a very standard common method that many people are used to. First in, first out is also available to you. That is done in SAP by running a FIFO revaluation job at the end of the month. So if we're using the previous numbers, our $100 and then our $110 purchase, our FIFO would adjust inventory so that our remaining balance would be our our 110. So our most current or latest inventory cost would be what's remaining in the system. And our cost on the P&L would be the oldest cost, so our $100 in that case. And then lastly, and the reason you're all here today is to talk about actual costing, where you can run a revaluation of your inventory based on precise input costs, which include all of your material cost components, your service resources that were consumed in manufacturing. And as well, the system will allocate all the overhead costs that have been collecting in your manufacturing cost centers as part of that revaluation. And then we'll adjust your inventory accordingly. And then optionally, you can also establish a new standard cost for your future valuations in the system. So as I said, we'll focus on the last one, but what commonly we will see is a blended scenario. So if you are a manufacturing company, it's very possible that you have all of your raw materials accumulating at moving average. Then you probably have your manufactured items sitting at standard cost to sort of remove some of the variability. And then if you decide to also implement actual costing, that is an additional layer you could put in after the fact to replace your standard cost with your actual cost. So here's just a quick overview. That graphic you see at the bottom is right out of the SAP guidebook as far as the process flow. So there is some preparation before you run actual costing. You're probably familiar with some of these jobs like GRIR clearing, overhead distribution runs, WIP clearing, overhead absorption, because all of those jobs will potentially impact your cost of goods and adjust your system or establish balances in accounts that you need to do your distribution of actual costs from. Then you're going to run your actual cost roll-up. We'll be talking about 3 related jobs there. So the actual cost roll-up, the actual cost allocation, and the actual cost release. And then if you have the added complexity of revenue recognition, that's the last job that you would do. So as far as feature activation, if you're not using actual costing, how do you turn it on in the system? That's actually really straightforward. So the graphic on the left is a screenshot of uh, the system configuration master inside ByDesign. Step number 3, scoping. There is a setting underneath inventory valuation, underneath financial management accounting, where you turn on actual costing. Once you've activated that, you'll be able to access the 3 jobs from the inventory valuation work center. And that is this graphic on the right. So your inventory valuation work center, I apologize, that's sort of truncated, but where you're seeing on the left are all your work centers. I've just focused in on that inventory valuation. And then you'll see these 3 new menu options appear in the system. And that's how you will run your actual costing. Now, as far as configuration otherwise, there really isn't anything to configure in the system. There's no scoping questions that have to be answered. There is one GL determination that relates to actual cost clearing. That would be pre-configured if you're using the SAP ByDesign chart of accounts. So other than that, you can simply turn this on and decide whether or not you want to run those jobs to do your actual costing. So actual cost allocation versus actual cost release. So there really is 3 jobs. The actual cost roll-up is the proposed analysis for the actual costing updates. So this is the first one you run. It's very safe. This is just giving you a report of what the system is proposing to do as far as actual costing changes to the system. You can run this multiple times. So if you don't get the results that you want, you can, fix whatever the issue is, run the roll up again until you get to the result that you believe is correct. Now, once you are confident of your actual cost roll up, then you would run the actual cost allocation, and this is the job that's going to perform the actual journal entry that you see in the system to reevaluate your inventory and your cost of goods, whatever other accounts are in play. And then lastly, and this is optional, you can run the actual cost release. And so that will now change the standard cost of your current inventory item to this new proposed or this new actual cost based on all of the jobs that you've run in the system. So that will give you greater accuracy for your next jobs. So what are the key benefits to actual costing? Why would you use it? Well, lots of reasons. So if you are in some sort of discrete manufacturing and there's a lot of variability, within individual production lots for bill of materials, that could be a reason. You may have governance reasons depending on what country you're in, that maybe you're required to use actual costing. But overall, some other benefits that you may want to consider is just, it is going to give you better monitoring of your cost breakdown. So it helps you to analyze the source of your costs, cost issues for your finished products. Another benefit is, as I mentioned earlier, there's very little configuration to do in the system. So I would say the challenging part of it is the learning curve to learn how to use actual costing and understanding what it's doing. But from a configuration perspective, very simple to turn it on. And then the last point, you can combine this with standard cost valuations. So you can kind of see both methods, and it gives you this clear benchmark for cost controlling and gives you that precision that I mentioned. So with that, let's dive into the system and have a look. What I've done is I've pre-set up some data for us, and give me a chance to log back in here. So what I'm going to target today is a very simple example. So when it comes to actual costing, as I mentioned, it's complex. We could probably spend many hours talking about all the different scenarios and all the different ways that actual costing could be impacted. So testing is a really significant factor in setting this up so that you really understand what the system's doing. For our purposes today, let's just consider this actual costing beginners or basic. We're going to look at a really basic manufacturing scenario that I've set up in advance. We're going to run actual costing on that one scenario so you can kind of understand what the accounting is that's happening here. And if we want to get into more complex scenarios, feel free to shoot me questions. I'm happy to to try and tackle those. Anything that I can't answer, we will endeavor to get the answer for you. I'll try to keep an eye on the question panel. If I miss anything, then Catherine will let me know before the end of the session. So with that, before we go and run the actual costing jobs, let's just have a quick look at some of that foundation data that I was talking about. So these are the jobs that we mentioned. We're going to be primarily working inside this inventory valuation work center. I want to go have a look at my material item. That's going to be the focus of our example. So for the purposes today, we have manufactured an 8-foot maple table. And if we look at the valuation history on this item, as one of the slides mentioned, your valuation is based on your business residence, your set of books. So we'll focus primarily on the US set of books, but it's the same in both IFRS and US at this point. So we've got an established standard cost. So here's where we set the perpetual cost method. We've decided to use standard cost, and we are using $200 as our finished cost expectation as far as manufacturing this item. So in advance of this session, I manufactured a table. And once again, if you're going to do this, try and do it in a simple scenario and then build out complexity from there. So I started with 0 quantity in the system, manufacturing a single item. So trying to understand all of the input points so that I can see what's happening as far as the accounting is going. So to help illustrate that, let's go have a look at that manufacturing components to see what the inputs were. So I'm going to go look at my production variance report. Sorry, I'm going to not go into this one here. And then we're going to run, so I'm just going to look at all my US data. So I can see a couple of items have been manufactured here. Let's look at the offset so we can see the input components. And so if we go down to this example here, this was production lot 1180. Let's just filter on that data. So what are we seeing here? We're seeing that this table has screws and it has maple wood. It has something else that's not an offset material. If we want to understand what that is, that's going to be an offset resource. So we can go and add that to our report if we like. So we can see that that's essentially a labor cost that we've allocated and the estimation. So once again, this is not actual costing, this is standard costing based on the inputs from the bill of materials. There's an assumption that this cost is $20 of labor cost to manufacture this item, and then $201 for the raw materials. So that gives us our final cost of $221. And then we can see here that when the manufacturing is actually completed, the system is only going to bring in our fixed cost of $200. So we have this remaining $21.63 sitting in production variance. So another way to look at this data, just to be really abundantly clear on it, if we go back and look at some of the journal entries as part of this manufacturing process, I believe that was my 2944, that's my lot. So, and look, filter even further, let's just look at the US books. So when we start our production order, the first step is we're going to issue our raw materials into production. So the system is going to consume our raw materials. You saw those 2 input costs, so our screws and our raw wood, and those go into work in process. As part of the internal service confirmation, the labor gets consumed into WIP as well. So now we've also got $20 of WIP, and that's relieving our service expense overhead. And now we are seeing our goods receipt from production, which is the closing out of that production lot, where we are receiving our final amount into inventory. So there's our $200, and we're relieving WIP of $200. So what do we know at this point? We know that WIP is essentially overstated in this case. Our manufacturing costs came in a little bit higher by that $21. So as mentioned in that illustration, with all of the steps that you would then go through before you would run actual costing, you're going to want to run your WIP clearing. So here is our WIP clearing job, and that generates our overhead either overrun or cost reduction, depending on the direction of your standard cost. And in this case, we have $21.63 of additional costs that we're debiting to our price difference from production account. So this is rolling up into cost of goods sold. And so what you've seen here is the basic standard manufacturing process that you all might be used to. And that, that process could be where you end. So you might just decide that this is the way that we manage inventory. And when we sell this particular table, we're going to book $200 into cost of goods sold. And ultimately, the 221.63 rolls up together overall into probably cost of goods sold at a parent level on your income statement. So once again, this is just how you decide to run your business. Now, if you're after that greater accuracy, this is where we would start looking at actual costing. So we're going to go back to our inventory valuation work center. And the first thing that's run is the actual cost roll up. Now, I've run this in advance because I wanted to make sure it's working, but I'm going to show you the exact output of this. So as I've mentioned, this first one doesn't post anything. This just gives you your introspective look at what the system is proposing to do for actual costing. In this particular case, we've targeted this job to run specifically on that one item. So once again, as I mentioned, if you're testing this, do it in a controlled environment, do it in your test environment, do it under a single item first so that you can understand all of those entries. Once you're confident and you won't move this into production, you will obviously just run this job across your entire system. So you wouldn't put any limiting parameters like I have here. However, then it's going to be a lot harder to understand maybe the detail. So this just kind of helps you with restricting what it's going to be targeting with the run. Then when we want to look at the actual output, we can see that we've got a number of jobs here. So this job was actually run, we ran it multiple times, and there were errors the first few times that we ran it. And so if you do get errors in the job, it's going to, and I could even show you one of those. So whatever the particular issue is, you're going to need to resolve that error. And so it's going to explain to you what the problem is. And you're going to need to resolve those issues before you can do a final job and post your actual costing. So once we resolve the errors, we then have a successful job. And at this point, we can go in and we can look at what the system is proposing. So here we've got our 161.63, which is our wood. We've got our screws, and we've got this 254, which is our final goods. So the first thing you might notice is, okay, this doesn't actually tie out to the $221 that we saw with everything that ran through WIP. So as I mentioned, actual costing is going to also reach into those cost allocation accounts that you have sitting where you are allocating overhead costs into your production cost centers, and it's going to distribute that mathematically across your various inventory and production lots. So in this particular case, if we want to understand how that distribution happened, we can drill down on this material cost item and we will get to an actual costing overview. And from here, you can see the cost breakdown by type. So we can see there's the original amounts that we expected, but we've also got some additional amounts here. If we want to look at it by GL account, we can see exactly what GL account it's coming from. So one of these is costs that have been accumulating in that cost center through a general administration overhead account. So that could be something that's directly posted into that account. This could be a overhead allocation run or some sort of distribution run you're generating in the system to say distribute from a cost collecting work center into a bunch of other work centers based on some sort of mathematical formula. So however it gets there, it doesn't really matter. And in this particular case, I manually put in a journal entry for $30 This maybe makes more sense if this was a salary account, but whatever you want to put in that you want to essentially capitalize into your actual costs, that's based on journal entries that you're going to do to those manufacturing cost centers. And if you want to understand what that journal entry was, we could go back to our journal entries. Let me go find that one. I did it yesterday. It's probably going to be at the very bottom of my list here. So there was that manual posting entry. So I just established that I wanted $30 of training cost into my Elmica cost center, which is my manufacturing cost center. And so that's where the system is coming up with this additional cost base, which it needs to potentially capitalize into inventory. So if we go back to our reports here, this is the breakdown so that you can understand how the system has come up with this 254.79. Now, once again, I'm doing a very simplistic scenario. If you had multiple production lots and multiple items, there's going to be math involved to distribute those costs across all of those items. All right, so that is the actual cost overview. So as I've mentioned, you can run that job multiple times, just like we did. We fixed an error before we finally got to the result that we felt was correct. And then the next step I'm going to go do is into my inventory valuation. I want to run my cost allocation. Now, this is the one that's going to actually post my job or post my journal entries. Now, you can run this job in test mode first, which is what I've done here. And you could go into that job and you can actually view it and you can see these are what the net journal entries are. So there's my $64.79. These are the GL that it's going to distribute it to. So if I look at this for reasonability, this looks correct to me because I'm actually taking costs out of my service expense. I've got a difference into my, backing it out of price difference, so the 10 and the 54. So manufacturing differences that came from my standard costing manufacturing. And ultimately, what am I doing? I'm increasing the value of my table by $54.79 based on what the system believes are my true costs. And for our purposes here, I'm going to actually run this job again, and I'm going to remove the test run. So when you run one of your jobs, you'll give a description, whatever works for you. Probably you're going to be running this across all your items eventually, so you may want to put in your company or your period. You can run this for a single set of books, or you can run this across all your set of books. And then you're going to need to choose your period information. And once again, are you filtering on a specific item like we are? Or are you running this across all of your items? And then you submit your job. So we're going to give this just a moment to run in the system. We can see that it's completed, so that didn't take very long. We can go in here and we can view, and this now we know that this has actually created a journal entry in the system. So we do have a final entry. We could drill down and look at that journal entry, and this is fully posted. So everything that you saw in test is now in a test mode has actually created a true journal entry in the system. So at this point, no change to our standard cost on our item, but we have changed our inventory value overall in our balance sheet. So just to confirm that, let's go back to our material item and let's look for our table. And if we were to, a few different ways you could get to the cost history through there. I can go to the valuation tab, kind of get me to the same place. So here at this point, we can see inventory costs, $254.79. So I ran that job on the US books originally. Now we're going to go back to our inventory valuation and we're going to do our actual cost release. And I'm going to run this job. I didn't run this in a test mode previously to today. So this is the first time I'm going to be running this. So we'll do our maple table again. We'll choose our company. I'm going to leave set of books blank. do period 8, and I will target that one item. So we just have to activate this, and then we'll just schedule it to run now. So like many jobs in ByDesign, you're going to probably have an execution details, like another queue where you're going to go in and monitor what has happened in your item. So no errors. This is our data selection. We can run through our messages. So just informational message about multi-level processing. And here is all of the items that have been updated as a result. So here we can see our final cost history on our items. So actual cost allocation. So as of the last day of the period, this is our resulting new standard cost that the system is going to use for any future production lot runs on this item. If you want to see it inside the valuation, you can see it here that we have this new actual cost established, 254. So that's what the system will be using as your next standard cost run the next time you manufacture this item. So once again, that last step, optional, up to you if that, but it probably makes sense to update your standard cost for the next run. And then obviously in September, as your inputs change, as our allocation accounts change, that amount is always going to fluctuate up and down depending on the input costs. So that's really it in a nutshell. Let me just go back to our presentation for a moment here. So just a quick recap. So I showed you originally the value of that item, standard cost of $200. I showed you a manufacturing event that happened. So that $200 item was made up of the following input costs. So in fact, that item was actually manufactured for $221 of consumption of raw materials and resource costs. Obviously, what hits the books for a manufactured item was the $200 finished, and then the $2163 was written off by the system. So these are our various production inputs. I showed you those journal entries where you see the raw materials being consumed. Here's where you see the service expense allocation happening. And then the final job, the closing out of that production order to receive your finished goods into inventory. You're relieving WIP, we're receiving our $200. So at this point, we understand there's $21.63 remaining in WIP. So a prerequisite to running your actual costing is to run all of those jobs that were mentioned in an earlier slide. One of those was the WIP clearing job. So here's a screenshot of the journal entry created as a result of running WIP clearing on that table. The system is now writing off the $21.63 from WIP. It's moving it into production variances. I showed you how I created a sample overhead allocation into my manufacturing cost center. So I've set up essentially $30 of costs so I want to distribute. This is, once again, outside of that production lot. So this is more of a month-end process to distribute any kind of other overhead costs that you feel should legitimately be capitalized into your inventory. At that point is when you can run the actual cost roll-up. So it's going to take all of the input costs from your production orders as well as the overhead and it's going to propose what your updated inventory valuation should be stated at. As mentioned, you can drill down into that number. So that hyperlink on the $254 on the previous screen takes you into the material actual cost overview. At this point, you can see the specific inputs that the system has come up with, and you could also view it from the GL account perspective. You'll run the allocation, so then the system is going to do the actual journal entry. So make sure everything is right when you do the roll up. So when you do this job, you are getting your final results and inventory is now being revalued. So this represents current inventory adjustment. And I don't have a screenshot because the time I did this, hadn't run the last job, but then the final job will show your actual costs restated inside your standard cost for the end of the month, and that's going to be the new cost that you use. So just a few tips and suggestions. Read the SAP ByDesign help file on actual costing to understand its full impacts. When you are in SAP help, if you just type in actual costing, you'll see a few different things. You can start at the top. This gives you the high-level overview. So this is a worthwhile read. You'll see that then it explains, goes into detail what the actual cost roll-up job does, the actual cost allocation run is. All of those links are there. So I do recommend reading this, get your own understanding of how the system works. When you do decide to turn on actual costing, you're going to do it in a test environment first. And just make sure you fully test it before deploying it to production. And make sure you design your tests in a controlled way. So when I go to train a client or test this myself, where I tend to run into trouble is if I just try and run this scenario on a month where there's already been some manufacturing events, I'm trying to run the jobs across, a plethora of items, and then it's a little bit difficult to parse out the entries and understand what's going on. So build up your knowledge in a controlled way by potentially create a new bill of materials with new input costs, with nice round numbers that you can control the same way that I did in my test. And then you can see exactly what is getting pulled into the system. So make sure you're running your jobs on your specific data set. So you can also use the filtering to say, okay, I'm only going to test my table or my couple of items, once again, so you don't muddy the waters when you're doing your testing. Once you've tested that, then obviously you can expand your test to include multiple items or your entire, month end to make sure that there's no issues that result from the overall data. You want to analyze all your journal entries sort of pre and post actual costing. I find it helpful to, maybe maintain a spreadsheet so I can look at all of those inputs and just sort of validate that I get to the same number as what ByDesign's actual costing engine gets to. And then make sure you control for those overhead scenarios. So understand how your cost allocations to manufacturing cost centers work and how they're going to impact your actual cost calculation. And the scenario I did was super simple because we only had one item that we manufactured that period. So you're going to want to run this as you get to understand it. You're going to want to run it across a spectrum of items, and then you can see how it's distributing that cost allocation across all the items. So that brings me to the conclusion. I have been glancing over at the question panel. I don't see any questions coming up. So maybe I'll just give people a second. If you do have a question, feel free to drop it into the question panel. If you are using actual costing today and you have any comments or observations, things that I didn't cover, feel free to speak up about those. We'd be glad to hear your experiences. Actual costing has been available for a number of years at SAP ByDesign, but admittedly, maybe just through chance, I haven't come across a lot of my own personal clients that are using it. So I would be curious to kind of hear feedback from people who have and what sort of experiences they have. So with that, I don't see any other questions. So maybe I will turn it back to Catherine. Thank you, everybody.
Awesome. Thanks so much, Alex. And thank you again for another fantastic Q&A Cafe. Thanks everybody for attending. Just a reminder to join us next week. That's August the 11th at our usual time for our next Q&A Cafe. That's going to be inventory management with MRP, material requirement planning, and SAP Business One. Again, thanks so much to Alex, and we appreciate your attendance, and we hope that you have a wonderful rest of your day. See you next week.